there is a drive, a push in some of these red states to allow their citizens to break free from the brain dead monetary policy of our government. And I think there is going to be an awakening. I will simply say this: if we see a sniff of another bank problem, which I think we will, when we talk about what Janet Yellen said yesterday, and there is a drive to get more precious metals, I am telling you, it will disappear, because there is such a difference between wanting to make money and protecting your ass. This is unlike anything I've ever seen, and I think that this is just the beginning. What we are seeing now is that on spades, because there is no motivational factor quite like fear. And it is oozing from people. It is dripping off of them. It's palpable. Here it is about people doing everything they can to keep from losing it. And this is one of the reasons that I say the market ultimately will define itself by a lack of available product. This is changing, and maybe it's changing not only because of what happened with the banks, not only because of the poor performance in the markets last year, but for the first time that in my career, you have states in the United States that are waking up, whether it be Missouri, Wyoming, Idaho, Kansas, Tennessee, Mississippi. All of these states are proposing. I think Alaska has one on the docket. They are proposing. Some of them have already passed it through their legislature to allow gold and silver as money to be held in the treasuries of the state and to be allowed for purchases and any debts, public and private, to be paid with precious metals. You know, most of the people in this country lived through last year and figured, well, you know, S&P was down 20% and 10-year treasury down 15, 16%, the most in history. The third or fourth worst year ever on the 60-40 stock bond split. But that's an anomaly, right? That it always comes back. Well, you know, in 2008, when it crashed, the Fed's balance sheet was 850 billion, and now it's 9 trillion, and all of that with interest rate sensitive investments, treasuries and mortgage-backed securities, which suppressed interest rates, which allowed an illusion of prosperity to grow from the financial crisis. And so, yes, and I think it was really very, very different than what we are seeing right now. And I just think that there are there's a gradual awakening happening right now. I do not see another place where I feel comfortable leaving my money in this environment. And you know what Janet Yellen said, I think everyone needs to understand, is really frightening. They are sticking a knife in the heart of the community banks, the small banks. They're going to collapse them, and they're going to herd everyone into the large, too big to fail commercial banks. And you know, the frightening thing about that, if you want to extrapolate and and this is all supposition, and that is impetus for ushering in the new CBDC to make everybody whole. This is something that, you know, there's a fine line between conspiracy and reality, but what they are doing is penning everyone, herding them into a handful of the biggest banks where billions of dollars worth of deposits are leaving every day from these small banks. These small banks that it's really important to understand what exactly that means, that will not be bailed out. These banks, first of all, it's important to note that when a deposit is made at these banks, the deposit is not an asset of the bank, it's a liability. And those liabilities need to be offset with something, and usually it's a bond, a treasury bond or a mortgage-backed security. And during the pandemic, Biden removed all the reserve requirements. And so these banks have very little currency on hand to meet demand for redemptions. And so when you realize that most of the bonds that these, you know, all these deposits that were made, the banks are gambling with them, especially the small banks trying to keep up with the bigger banks. They were gambling with them and putting them into things that aren't so speculative like treasuries, but things that are more speculative, maybe like mortgage-backed securities, most of them at rates much lower than we have right now. So their balance sheet is loaded up with bonds at saying 2.5%, and now we're approaching 5%. So what happens is that when there is a run on the banks, even a small one, these small banks are forced to liquidate these bonds that have lost over half their value or more just to meet demand for withdrawals. And as we saw, you get a larger rush and a bank can become insolvent in 24 hours. And the FDIC cannot handle this. Their insurance fund only covers 0.03% of all the total bank deposits. And when you put all of this together with everything that I've been talking about for the last 2 years on the Belt Road Initiative, the Shanghai Cooperation Organization, the BRICS nations, the Eurasian Economic Union that comprise almost 85% of human population, moving away from the dollar, de-dollarizing, striking deals, OPEC joining the BRICS nations, telling the folks in Davos we're open to taking other currencies for oil settlement. Do you not see, people, what is happening? The West is being laughed at, and these types of stupidity laden decisions that are destroying the value of the dollar, destroying our credibility, is only hastening the demise of the dollar and accentuating and exacerbating the push to de-dollarize by these countries. And I tell people right now, you better buckle up. And if you've been thinking of buying gold and silver to protect your ass, you've got to do it now, because I believe it will be events like this that is going to wake up the masses who have been asleep, realizing that 0.5% in this country has any allocation to metal. Mario, this is the fuse that will ignite the masses and will wake people up to the only place, in my mind, that you can seek any refuge from, and that's precious metals. The only way money is created, i.e. monetary policy, is through lending it into existence. So the Fed can lower interest rates by buying bonds all they want, but that money doesn't get out into the system unless the banks lend it, and they're not. They're rushing into the reverse repo market, rather give the Fed that money at 4% overnight than lending it out into the economy. They don't like that. That's actually deflationary. That pulls money out of the system and liquidity out of the system. If they want inflation, then it has to be lent into existence, and the banks aren't lending into this fragile economy. I think it is more than coincidental. And if you wanted to do this, there is no way that they would weaponize the dollar and think that there wouldn't be any consequences. And I think the consequences of kicking Russia out of SWIFT and freezing their assets, and in the case of the European Union, actually confiscating those assets to be used in the rebuilding of the Ukraine, is going to make the rest of the world say, I'm out, we're done with this. We're done, because if we fall on the wrong side of the US or of the Western interests, then they're going to do this to us too. So it's time. So all of these countries at the same time are coalescing against us as we continue to make ridiculously moronic decisions that should only reinforce all of these countries' decision to break free from the Western hegemony and do all they can to form this union before all hell breaks loose.